This is Barry Zalma speaking for Claim School Incorporated's blog, Zalma on Insurance. Today we speak about appraisal and why policy wording must limit appraisal to the quantum of the loss only, and why the United States District Court in Ohio concluded that appraisal can consider causation in Ohio when it determines the amount of loss, because the appraisal wording did not eliminate the word causation in the State Farm policy that was the subject of its action. Defendant State Farm issued a homeowners insurance policy to Plaintiff Sharon Marie Rogers. This policy was in effect on the date of loss on March 25, 2023. State Farm determined the amount of loss to be $3,490.68, which was less than Rogers' deductible. Rogers retained a public adjuster, Insurance Adjusting Services West Penn, and West Penn determined the amount of loss to be $214,871.20, a rather big difference. Plaintiff moved the court to compel appraisal to resolve the dispute over the amount of loss and stay the litigation in a case called Sharon Marie Rogers v. State Farm, decided by the United States District Court for the Southern District of Ohio on October 11, 2024. And the court resolved the dispute over the need for and the scope of appraisal. West Penn demanded appraisal on behalf of the insurer, and trial counsel repeated the demand. Rogers' complaint against State Farm was filed the next day by counsel to avoid the 1-year private limitation of action provision of the policy. The purpose of an appraisal is to provide a plain, speedy, inexpensive, and just determination of the extent of loss. The appraisal provisions are an integral part of the body of each policy, precisely the same as every other paragraph, and are enforceable in Ohio as any other bargained for contractual right. The parties agreed that a storm is the covered cause of loss, and that the March 25, 2023 storm caused damage to Rogers. State Farm refused to honor Rogers' demand for appraisal for 2 reasons. 1, she did not comply with the condition precedent to provide to State Farm at least 10 days prior written itemized documentation of a specific dispute as to the amount of the loss, identifying separately each item being disputed. Instead, Rogers only provided an estimate from a public adjuster, which references the global monetary estimate for the combined interior and exterior damages, and failed to specifically identify what items, if any, are being disputed. And 2, State Farm contended that the amount of loss to be determined by appraisal includes only the pricing of the repairs it deems are covered, not the damages that Rogers, relying on West Penn's estimate, thinks should be covered. Included as part of the demand for appraisal was its 197-line item repair estimate. A claims specialist promptly responded on behalf of State Farm a week later. State Farm's response was that items in the West Penn estimate included items that present a question of coverage under the policy, and that appraisal cannot be used to resolve disputes regarding coverage provided by the contract, and therefore appraisal should not be appropriate as outlined above. The appraisals and the umpire had no authority to decide questions of coverage. However, the USDC noted that nowhere did State Farm's agent state that Rogers' documentation was lacking under the policy, and in fact, claims specialist McKenzie noted that West Penn's estimate established a dispute for the claim. The USDC concluded that State Farm may not reverse course after litigation was filed. Now, parties sometimes agree to a policy that prohibits appraisers from answering questions about causation when setting the amount of loss, but when the appraisal clause says nothing about causation, as did the State Farm policy, Ohio court's construction of amount of loss controls. So State Farm contended that the appraisal clause addresses causation in that it prohibits the appraisers and the umpire from deciding any other questions of fact. The United States District Court disagreed. It stated that State Farm, the drafter of the policy, included specific language about questions of law and questions of coverage, and if it intended to include questions of causation, it could and should have done so. The USDC concluded, therefore, that to allow a catch-all phrase to incorporate causation was at odds with Ohio case law to date, and equally important, undermined the purpose behind appraisal. The court therefore concluded: 1. Plaintiff's motion to compel appraisal was granted. 2. Defendant was ordered to proceed with the appraisal process as set forth in the policy and at the soonest time possible, and the appraisal should separately calculate and identify disputed costs to include both exterior and interior damage so that the court can either include or exclude them once it is determined whether the policy provides coverage for them. And 3, the civil action was stayed until a full appraisal occurs. The history of appraisal, in my opinion, in fire and homeowners insurance policies have more than a century limited the appraisers to establish only the quantum of a loss and were not authorized to determine coverage issues without language in the policy stating so in the policy wording. The USDC in this case, in a Solomon-like decision, applying Ohio law, requires that the policy wording must include language in the policy that the appraisers may not consider causation. And since, in this case, they can, they must delineate in their reporting which coverage decisions they have considered so that the court can determine from the appraisal award what parts of the award it can affirm and what it can disqualify because of the coverage issues. This video was adapted from my blog, Zalma on Insurance, which is available free to anyone who clicks on the URL zalma.com/blog. You can subscribe to the blog, and if you do, you'll receive notice of every blog posting, usually 5 or 6 a week, and you'll also gain access to the more than 4,900 blog postings. You can also subscribe to these videos, which are free on YouTube and rumble.com, and if you do, I'd appreciate if you'd click on the like button on YouTube and the thumbs up button on rumble.com. And I'd also ask that you please tell your friends and colleagues about this blog so that they too can subscribe. If you're interested in further detail about insurance, insurance claims, insurance law, and insurance fraud, please consider, for a very small fee, subscribing to my Substack publication. Thank you for your attention.